think we're ready to go. Thanks for coming, guys. This is going to be, I think we're on like our 10th week or something like that. This coffee chat's going to be a little bit more about kind of all the programs that are in place right now, all the programs that we've got going on, and more focused on the Q's benefit, the 75% wage subsidy. That's kind of the big one that everybody's kind of looking for, kind of looking into. And then also the CEBA loan. There's some good changes there that I think are relevant to everyone. So just off the top, one of the ones that have changed since last time we had a coffee chat is the CSRA, the rent assistance. That one has been extended to September 30th, which means that you have up to September 30 to apply, as well as there's been extension through July all the way through September for that coverage. We haven't really seen a ton of people actually use that subsidy at all, but it is available for you. Same criteria. I encourage you, if you're interested, to go back and take a look at those older videos that we describe a little bit more about it. The only new information about it really is that it's been extended all the way to September. If you already applied and you qualified, you do not need to reapply. You automatically qualify for the 2 new periods or 3 new periods that they've opened up. The second thing we've got is the CEBA. Originally, the CEBA deadline was September 1st. That has been since extended all the way to October 31st, which means that if you haven't applied for it, you still have about a month and a half or so to apply. Remembering that there's the 2 streams. One is the payroll, $20,000 minimum to a cap of $1.5 million in payroll. Having said that, in order to qualify for the non-deferrable expense, the second stream, you had to have payroll of less than $20,000. If you had payroll less than $20,000, you were eligible for the non-deferrable expense stream, which is $40,000 minimum all the way up to an expense of $1.5 million. That included non-deferrable such as like rent, utilities, regular scheduled debt. The caveat being it had to be between January and February, or if it was a contract, it had to have been signed prior to March 1st, 2020. That would qualify as a non-deferrable expense. So having said all those things, again, CEBA loan ends, or the deadline is October 31st. It's a great program. You get $10,000 forgiven if you pay it back before December 31st, 2022, I believe it is. And then, sorry, just admitting some people. And yeah, like I said, 10,000 back and due October 31st. The last one that we're gonna talk about before we get into the Qs is the installments. Installments have been pushed forward all the way to September 31st, which means that if you had late filing penalties or late filings due, as long as you have those filed and set up by September 31st, you get to waive those interest and penalties. If you had any payments or installments due up until now, as long as you paid them before September 30th, you will not get any interest or penalties on those as well. So that's a great program, making sure that you're getting your payments in. Oh, by the way, if you guys actually have any questions as we go through, please feel free to ask them. Either if you want to like raise your hand, unmute yourself, whatever, it's all good. Or if you want to type in the chat, go ahead. And the last really big program that we want to go through is the Q's benefit. Now, this one has changed quite significantly. We did an extensive video about it probably a month or so ago, but we're going to go in detail, kind of the big changes, what's important about going into the future periods, and kind of some things to pay attention to. Okay, so since the last time we looked at it, we were just coming out of period number 5, which was the old method, which was a 30% decline in revenue, and that allowed you a 75% wage subsidy based on a $1,129 weekly remuneration. That was kind of the old method, and if you qualified in one period, you qualified in the following period as well. That applied basically from periods 1 all the way through period 4. Then in period 5 and 6, we experienced a huge change. They called that the transition period, which allowed you to use a rule called the safe harbor rule, which meant that because there was this new system that they're coming out with, you were allowed in period 5 and 6, although they came out with the new calculation, to use the old method. So the new method was basically that the wage subsidy is now split into 2 pieces. You've got your top up and you've got your base subsidy. The base subsidy capped out at a revenue decline of 50%, which meant that the largest amount of benefit you could receive on the base is based on a 50% decline in revenue. Anything less than that would slowly diminish the amount of subsidy that you would receive. The calculation roughly kind of works out to whatever your decline in revenue for the period was, multiplied by the multiplier for the period, and then that would get you what your base rate was. The multiplier declines period over period, starting at the highest at 5 and 6, where it was 1.2 times whatever your revenue decline was, and then it diminished all the way through. So kind of what we're seeing is as we move through the periods, regardless of how much your revenue declined by the time we hit December, which is the last period, you're going to see less and less subsidy, irregardless of how much your revenue decline was. Having said that, it also includes the top up. Now the top up is a little bit more flexible, I'd say. The top up is for people who experienced a revenue decline of greater than 50%. So basically anybody above that would qualify for what they call the top up subsidy. And the top up subsidy is the difference between whatever your revenue decline was and for the last 3 periods. Sorry, that's an important caveat. The top up required sustained revenue decline. So before, what we were able to do is we could use the rule where it's like you qualify for one period, you qualify for the next. So kind of like what happens with this subsidy is that you have to sustain an average revenue decline of over 50% for the last 3 periods. So we're actually just about halfway through period number 7, which means that for periods 4, 5, and 6, you would have had to sustain an average revenue decline of above 50% to qualify at all for the top up. Okay, so that's a lot of information, but the idea is you have your top-up subsidy and you've got your base rate. You combine those two amounts together, and those two rates that you calculate together will get you how much overall Qs that you get for the period. Now that number is what you would use against all of your remuneration, what you pay your employees per week. So that's kind of like that's the big major calculation change. On top of that, I get this question quite a bit, is people often ask, well, what happens with, I used to be able to say, I qualified last period, I should be able to qualify for this period. What happens to that rule now that, they've changed the rules? Is that still a thing? It very much is still a thing. It's called the deeming rule. It has changed slightly. Before, it was basically as long as last period qualified, you qualify for this period. It's changed to say, if your revenue decline for last period was larger than your current period, or if you would receive a larger benefit as a result of last period's revenue decline, then you can elect to use that revenue decline in the current period. So the example I always give is last period, you had a revenue decline of 60%, but then this period you're at 40%. It would be in your best interest to cap out that subsidy rate at 50% by using the 60. So you carry forward, and now you have a 60% drop for the current period. So that's kind of how the new subsidy works. There's a couple other rules that don't necessarily apply to everybody, but are a really great benefit and something to keep in mind. For those of you who have a seasonal business and who may have a different flow for how your payroll runs, one of the nice benefits that they've added is that you can change your baseline period. There are specific requirements and specific periods that you can elect for each Qs period, but effectively what it does is it allows businesses who are a little bit more seasonal, who may not have employees in certain periods, to get the largest benefit. So the best thing to do there is, if you think you're a seasonal business, take a look, review the, I believe we have it on our website actually. If you take a look and you look at that spreadsheet, it'll tell you what you can select for your baseline calculation. And if you think that you have more wages there, that's probably a good place to start reviewing. Again, it changes per period, so I can't really give you a broad statement like, oh, it's from this date to this date, but it is a good thing to look into. The last thing, sorry, I'm just looking at my notes here. The last thing is, there are grumblings and there are like some audits surrounding the Qs have already been released and they're already in the works. Not necessarily to be alarmed. The general consensus is that CRA is committed to high profile, high earning audits to start at this time. That's not to say that these audits aren't going to come out and that they're not going to happen, but there is quite significant documentation requirements for the Q's benefit. With that said, most of the documentation is not stuff you already, it isn't something that you wouldn't already keep. They'd be asking for things like, revenue ledgers. They'll be looking for monthly income statements. They're looking for cash receipts and stuff like that to support basically your revenues. Because the biggest risk here is they're concerned with what your revenue per month is going to look like, and that what you applied for and what your accounting records reflect are the same. So having said that, I don't think there's anything else that we have that's included. I don't think we have any other large changes. Yeah, that's kind of all the programs that we've got going on up to date. Those are some of the ones that are the biggest, the ones that are going to hit home the most. If you haven't done anything with the Qs yet, I highly recommend taking a look. It's a great program. We've seen lots and lots of clients get a good amount of subsidy, and the turnaround time is relatively quick. So if you have payroll and you haven't had a look yet, even a small amount of subsidy can be helpful, especially with period 5 to 10 being in place. And basically, as long as you have a revenue decline of more than 0%, you qualify for some amount of subsidy. So it is a great program that I would highly recommend looking into. Does anybody have any questions at this time?
I was curious about the auditing side of things. What kind of information and records and documentation should people have on that?
Yeah, that's a really good question. So one of the big things with the documentation is they're going to want to see your full annual year's revenue ledgers, which basically require you, like everything in your normal accounting records that would be there, is number one, the first piece of documentation. They're going to ask for monthly trial balances, and then they're also going to be looking for monthly income statements, as well as monthly trial balances. Almost all of this information is readily available on your accounting software, so that stuff is, it should be fairly simple and straightforward to get put together, though the only big thing is that it does take a lot of time. A lot of the stuff that they're asking for is very, very time consuming, in the sense that, normally people aren't pulling a lot of this information so extensively. So the big thing is, it's going to be like pages and pages and pages of revenue. So that's the big piece. That portion there is really large. The second big one is, sorry, just one second. The second largest piece is the employee information. They're going to want to make sure you're actually paying your employees. So record details of where you're paying your employees from, like the account. They're going to look for bank statements, bank recs. They're looking for employee details all the way down to when they're hired, what their SIN numbers are, and their addresses. And they're going to be looking for confirmation that each one of those employees have been paid. And because the reason that they're asking for kind of like the specifics surrounding actually being paid is one of the rules with respect to rehiring an employee. So for example, if somebody was rehired, let's say at the end of the month, but you elected to back pay them for the month, like for example, they actually started March 28th, or like, let's say June 28th, but you back pay them for June 1st. In order to do that, so that they could get the subsidy, you would have to pay the employee before you receive the subsidy in order for the subsidy to qualify. Now, obviously, this may change as we move forward, as they're usually starting with the most high-profile audits first, and then they're going to work their way down. But at this time, from what we see, is that's what they're going to be looking for, and that's sort of the documentation.
I guess my follow-up question on it is it fair to assume that everybody that applies for these programs is going to be audited?
Yeah, that's a really good question.
So what's the period of time that they might go back on this stuff?
Yeah, that's a really good question. I believe the statute bars 7 years, though I don't know when they're going to really pump out the wave for when they're going to focus on the audits. I can't say for sure, They are just in the beginning phases, so I wouldn't imagine that they're even going to start heavily looking into this until 2021. From what I understand, they are hiring a whole bunch of other auditors or more auditors to be able to facilitate these programs. As we've gone through, we have seen some quick spot audits, and they have some checks and balances in place that kind of prevent odd or out of scope applications. Like, for example, if you say that you're only applying for a subsidy of $5,000, but you say you have employee wages of like $500,000, that usually gets flagged, and an agent gives the client a call to see whether or not, like, what's going on there and why is it that the wages don't quite match what the expected subsidy is. Obviously, they don't get really granular with it, but right now, there's really not much. I would say 2021, I would say it's going to start picking up. How small they're going to go, I wouldn't be able to, I can't get in the mind of the beast, but I think we can expect some audits. There's another question in the chat here. It says, is there a deadline to apply for the earlier periods if we miss them? That is a really good question. For those of you who haven't applied for a subsidy yet, you can still apply up until, I believe the date is January 31st, 2021. So all periods are, oh, sorry, that was our other computer. All the periods so far you can still apply for, and you will be able to apply for them up until January 31st. So if you missed something, don't worry about it. Don't stress. It's still available. In some senses, a lot of our clients, we try to get them in as the periods have been opening up. But obviously there is some time delay between, when the end of your payroll period is and when you get your bookkeeping done. And it has become more and more imperative with the Q's benefit to ensure that we're looking at all of your bookkeeping records because of that 3-month revenue decline average. We want to be able to get all relevant information for the current period so that we can get the best subsidy, especially because we're looking at such a broad time frame now. So don't stress too much, but get it all in before January 31st, I believe the date is. And if you have a lot of periods to apply for, it's always better to try to get them in sooner rather than later. Just for getting the cash. The turnaround time, I believe, if you have direct deposit set up, turns out to be about a week's time, and you'll get the cash deposit into your account. Check obviously takes a lot more time given the physicality portion. But yeah, the sooner the better for sure. Okay, I think I've answered everybody's questions. If anybody has any other questions. Okay, I think that's everything, unless Jesse, you had another question? Okay, great. Thank you everybody for joining. That was great. Those are great questions. I hope this was insightful. As usual, I kind of prepare all the Qs and even the SEBA stuff here. So if you have any questions regarding either of those programs or any of the other programs that I had mentioned, or if you need help applying or you just want to bounce an idea off, please feel free to reach me at my email. It's eric@galloandco.ca. Yeah, and if not, have a great weekend.
Thanks.